Good morning, everyone. Welcome back to the channel. Does anyone still eat at Chipotle? Well, I still eat at Chipotle. I love Chipotle. But the stock has not been performing well. Looks like me going there is not helping this company. $53 billion valuation. Stock selling about $40. Here's the fundamentals. They're actually not doing too bad, but they have become a mature company. They're a cash cow. Stock has become a stalwart. They aren't the same company as they were 10 years ago, where they had aggressive growth. Check out total revenue. For the past year, they have fallen into single-digit growth. Earnings per share has been slowly declining. Profit margins have been pretty stable, 40-41%. The free cash flow has slowly been deteriorating, and they have posted the first year-over-year negative declines on their net income, $436 million versus $455 million. So a slowly flat and deteriorating income statement, balance sheet, and statement of cash flows. They're just not the growth company they were before. But if you're looking to invest in the retail food sector, what other companies should you be looking at if you're looking for a growth company versus Chipotle? So this video, I'll go through 3 of my top picks. Companies that have a little bit smaller market cap, but are on their growth phases, could be a better investment than Chipotle. So we'll go through that today. First one is CAVA. This is a Mediterranean fast casual chain. If you haven't heard of it, it's pretty much like Chipotle, but Mediterranean food. By 2032, they already plan to reach over 1,000 locations, and they currently only have 398 units. Chipotle is selling at a $53 billion market cap, while CAVA only sits at $7 billion, so small company. And from its peak back in December of 2024, it is also down about 60%. Just a couple numbers in 2025. Revenue growth is growing 28% year over year, and same-store sales growth is growing 13.4% year over year. So we'll do a full fundamental analysis on CAVA Group, but we're just going to do a quick rundown today. Number 2, again, another stock you should check out, Sweet Greens. Another smaller company in the retail food sector. Stock keeps on dropping. All-time lows. It's pretty much at an all-time low. It's down from a peak of $40, down over 80%. Whoa. Market cap sitting at $900 million. I actually did a fundamental analysis on this one. If you guys want to check it out, check it up here. I'm going to have to make an update on that video. But $7.61, this thing keeps going down. Let's just check out a quick. Okay, highly shorted, 23% of the shares are sold short. And we have an insider buy at $13. One of the directors has purchased shares at $13. The stock is currently sitting at $7. So if you buy this stock at $7.61, you're buying it at a cheaper valuation than what the director just paid for. So if you don't know what Sweet Greens is, again, it's pretty much like Chipotle, but for salads. So this company, again, could offer some compelling long-term growth potential. In my analysis of this company, I talk about the Infinite Kitchen, which is going to be their automation initiative in generating stores with higher level profit margins. With these Infinite Kitchens, this could drive significant margin expansion as this technology accelerates. Just some numbers for you guys. Approximately 40 new locations are planned. And it looks like right here, 25 new Infinite Kitchens will hit the market this year. So they're expanding Infinite Kitchens, they're expanding Sweet Greens, but the stock has kept on falling. A lot of pessimism on this stock right now. And so, lastly guys, besides Chipotle, another small company is Dutch Bros. $8 billion valuation, $48. Look at this drop. Let's see, from a peak of $80, down 40%. Check out my fundamental analysis on this one, guys. I think this is another good company to check out. Definitely better than Starbucks. And Starbucks has also turned into a stalwart. They're a cash cow. But Dutch Bros is up and coming. They're coming for the throne. They're expanding fast. This is a high growth play in the coffee segment. The company differentiates itself because it is a drive-through focus model, and they've shown strong unit economics and expansion potential. If you've ever gotten to Dutch Bros, like, the lines are crazy, but they're fast. You got workers running around on these iPads. A lot of the restaurants in this industry are shifting toward concepts that could deliver both operational excellence and compelling value propositions. As prices and inflation goes up, we want to track and see which companies can keep their prices level. And so Chipotle isn't going to go anywhere anytime soon. They are giant. I still love Chipotle, but at a $53 billion valuation and the company not at its growth phase anymore, I think it would be better to check out Sweet Greens, Dutch Bros, and CAVA stock. And I'll go ahead and make a full fundamental analysis But as of right now, just a quick rundown on these 3 companies. Let me know what you guys think. Are you investing in any of these ones that I just listed? And yeah, thanks for watching, guys. Don't forget to like, subscribe, and we'll see you on the next video.